The S&P 500 and the Nasdaq 100 have had some pretty wild moves over the past few weeks. You had that nice downturn coming into the beginning of January, followed by a strong recovery so far. But the real question is, can we start mounting 17K here on Nasdaq? Can ES hold above 4,800 and push back, hopefully into those all-time high territory, which we're kind of so close to right now? You had stocks like Nvidia ripping, price discovery, all-time highs here. You have Microsoft doing very similar things. Well, you have the DXY and dollar causing issues, consolidating near their local highs, pushing arguably back to the 200 SMA, right? You have Bitcoin retracing back hard. So there's a question, is the risk off narrative kind of coming back into play? And that's what we're going to attack here. Happy Sunday, everyone. Hope you're all doing well. So the few things that we have to attack really go into DXY. And a lot of this is going to be opinion based, not necessarily fact based, because I have no evidence. So I have to give you overall opinions on how I think the Fed is going to kind of tiptoe around these things. We also do have tech earnings coming into play very soon, some starting next week. And then the week after, we have Tesla, Netflix, and things like that coming into play as well. So a lot of, in my opinion, volatility could start to ensue here. Now, the biggest thing, in my opinion, are some of the stuff that Fed Bostic said today. So he had made some comments about where inflation's heading, the overall goals, when they plan to start doing these cuts. And they're still aligned with my overall opinion and where we're going there. So we'll attack that. A few things before we jump into that, though. There are a few Discord spots available. The link is down below. Those are first come, first serve. We opened up a few. We usually don't open those middle of the month, but there's a few there. So take advantage while you can. Also, too, we're going into this week, and there's no trading tomorrow, so I made a video today. Again, especially going into earnings, before we go over any charts, I urge caution heading into these earnings. Just like every earnings season, but right now with where the dollar is at, I believe there's more likelihood if earnings miss, downside could ensue a little bit quicker. Personal opinion. Let's jump to it. First thing we're talking about is what Bostic said. So Fed Bostic, this morning, warns U.S. progress on inflation is likely to slow. Okay. So what he said right here, you can see a seesaw effect if policymakers cut interest rates too soon, which I agree. We do not want to cut rates too soon. I think summer is the earliest that it could happen. And I don't even think maybe, if we're really waiting for their 2% goal, then I don't even know if we're going to have them by summer. Personally, it could take all into 2025 potentially. Okay, so very important to understand this. Bostic's been a little bit of a hawk, but nonetheless, I think what he said is totally true here. And he said you only hit the Fed's goal in 2025. They think you're only going to 2.5% by the end of 2023, which, in my opinion, is totally true. We're headed on the bottom half of that, descent on inflation. I think CPI is at 3.1 right now, so it's logical. I don't think you're going to drop, that fast again. It would take quite a bit. Okay, going back into the charts. Now, this is where things are going to get a little bit interesting. So we're going to pull up all of our tools here just so we can see these really quick. Let's get rid of the EMA. Just pull that up right there. Okay, first things first, NQ NASDAQ. Now, going to the NASDAQ, let's start a little bit higher. Go to something like the weekly so we can see here. Now, again, dangerously close, right? If you take adjusted off, you can see you're already breaking back above. You adjust for, futures rollovers. Obviously, you're not there just yet. Okay, QQQ though, you are at those all-time highs and you're trying to mount back over your previous all-time high right about there. So you get about the 15-minute, you can see we closed again here right above that level. And then you go to something like the weekly, and I think it paints an even better picture with how much Qs really did recover. I mean, like really great. I mean, it was Bears looked really good for a second, right? Things to be looking at there. But I will say though, this is the concerning part for me is I look at the DXY on like the hourly right here, right? And you're just consolidating here, right? This is the worrisome part. You bring up the 200 SMA here, right? Right about there. That is concerning. Those are concerns here, okay? Right? And also, too, I want to highlight, if you guys are interested in where we get our zones, where we get our levels, everything like that, it's from our chart prime indicator right here, Market Dynamics. They have a few other ones as well that they've been adding in there. So you can see all of them right there. And then as well as a custom one that they have designed for us, which we have more custom ones coming into play very soon. As you can see, the buyers versus sellers down there as well. Their link is down below, so make sure you check them out. Okay, so that's the concern there with DXY with how you're ranging there, okay? However, when you zoom out to like the weekly and higher time frames, I mean, you can still see it's very clear in my opinion. Let's just get rid of all this right here. The dollar's in a downtrend, at least, since, 2022, right? Falling off that cliff, right? Now, again, the really bullish sign out there too, and this is what I keep saying, like, you don't got to get too bullish here. You don't have to get crazy. You don't have to jump the gun, because if these things play out like we assume, right? If you break back below 4% on your 30-year yield, I become maybe the biggest bull out there. If you break back below 4% on the 30-year yield, the market will become incredibly bullish. It will. No matter what, I promise. It's going to be very, very strong when you get to that point. But if we look back here on shorter time frames here on the yield, you are retracing. You could argue back into that 200 SMA. You're finding a lot of resistance, a lot of sellers trying to push you back down there as well. So a lot of these bond traders, there's a lot of indecision. To get back above this point as well, I think you have room for downside in the market. But again, I don't think we see that mount or strong movement on yields, at least until earnings, okay? Or PCE when that comes out as well. So those are things that I'm viewing there. And I think you have to be paying attention to the 30-year yield, what's happening with the dollar, because it's all underlying there. What I will say, though, is even though you've had this uptick on the DXY and you've been ranging in this area and you're pushing back up and resilient, it's interesting, and it's something that you need to take notice of, that NASDAQ and ES are holding up the way they are. It's a giant caution sign for being short. Personal opinion. If things were to get really bearish here, let's play the game of things get really, really bearish here and we have a lot of downside potential, okay? In all actuality, you get back below 200 SMA, bad things probably ensue. And you're not just going to drop 1,000 points or 500. There's going to be a pretty nice drop. So you're going to have those opportunities. Just like we told you back in 2022. What happened? You broke down from the 200 SMA, eventually retested it. You had to wait 3 weeks, but you did. And then it was just chaos to the downside. So again, you're going to have those. Everyone thinks you're going to miss out. You're not going to. I say this every time we get a big move. Like there's going to be another big move. You're going to have another great opportunity. They come. People, they do come, believe it or not. Just like when you're pushing up, everyone's like, oh, when am I going to get upside opportunity? You bounced at the 200 SMA and you went crazy. Like, if you didn't want to buy, that's your own business. But again, you have those opportunities. Okay. Now, a step beyond this, you look at something like equities. Before I jump into that, again, everything lines back up with futures. And again, you might be tired of hearing me say this, but when it comes to going long on Microsoft or Nvidia or whatever I'm looking at, if indexes don't line up with that thesis, then I'm not going to trade it. So when I look at NASDAQ, and I've said this plenty of times, under 16.8, I think you're a little bit in the middle of nowhere. Under 16.6, you're very bearish. And then you get to the area of like, I don't want to go long. I favor the downside, right? And so it's really easy and clear to see that. Now, if NQ starts to mount above 17K, I think it's really like in the realm of possibilities that Qs just continue in the price discovery and all-time highs. Like it's going to happen, okay? And Nvidia and Microsoft, these companies that are just killing it with all this momentum behind them, like they probably carry the NASDAQ like they did earlier in the year as well, or last year, right? Think about it. So I do want to highlight that. And again, what I said about the dollar and yields is all very true. So you don't even have to get caught up on this idea of like, okay, I got to catch the move right now, because I'm telling you, the big sign across the board will be when the 30-year yield gets back below 4%. Because when that happens, you're going to see TLT bounce. It's going to bounce hard. It's going to bounce quick, okay? And it's also going to be the sign for risk on again. When did we see the IWM and the Russell and small caps get a lot of love? When the yields were dropping rapidly. Why? Because loan rates, everything started to drop as well without the Fed having to do any cuts, right? It wasn't because the Fed was like saying, oh, we're going to do cuts tomorrow, this or that. No, it wasn't the reason, right? It was because yields were dropping so quick. So I have to put a lot of emphasis on that so people understand, right? And I don't even think you have to get aggressive until that point, because once that hits, we saw what happened last year below 4%. It was a lot of good things. It was so good that you even survived a banking collapse. Think about what was happening there. Like tech was so resilient under 4%. Really think about like what was taking place. And then the short-term top was put in once you broke above 4%. So again, I think the level is very important. That should be like the number one thing you watch, the number one alert on your chart. So I'm not going to go over too many equities, but I do want to cover the really strong ones here, right? And so we go over something like Microsoft. And again, like I can only say this so many times, and I go over a lot of these on Twitter. So if you, again, the link for Twitter is down below. You just click the link, take you right to my page, and you can see a lot of these charts. So you can go check everything out. And if you ask a ridiculous question, I might roast you. Who knows? Okay, so Microsoft. Like you're clearly in all-time high territory, trending up. The last time you broke above highs, you ended up running from $3.50 to $3.70 almost, like a $20 run. You just broke highs and you're up like $4. I personally think 400 is going to be like around the target. Personal opinion. Okay. Microsoft, you're obviously there. You look really good. Dude, like, it looks stout. Like a lot of momentum here. A lot of buyers stepping in. Nvidia, again, similar action. We sat here for months. Like you literally sat here from August into January. Think about that. Almost 5-6 months, right? Pretty crazy to think about. You break out. Unlikely you break out, you come straight back down. Just saying. And then there's a handful of names where you're getting dangerously close. You have Meta, right? Pushing into all-time highs, right? 385, top of the list here. Dangerous. We have Amazon, not even there yet, but it's getting close. Again, getting very, very close if you start to mount these levels that we talked about. So again, when I look at these, I'm like, things could start to heat up very quickly, especially if these earnings play out like we were kind of assuming. Look at AMD, for instance. 2 months ago, not even, you were at $96. Fast forward, you're up 50% on the stock. More. And you're getting into all-time highs. So again, it's really important that I understand where people come from, but they like, oh, well, this is all bad, and inflation, and this and that, and market's going to drop, it's going to do that. Maybe, right? But why not just wait for confirmation? You know what I mean? And I think it's important that I show like these charts so you can see that I'm not just saying things, right? The logic is like clearly there that we are in a bull trend, short term, long term, whatever you want to consider it. Like very incredible what we're doing. And it's not just tech names. You have names like Costco going bizarre, going crazy. Names like Target recovering rapidly. You have names like Walmart recovering rapidly, right? So again, food for thought here. And again, I can go into more sectors. LLY, healthcare, all-time highs. UNH, it keeps getting very close to just wicking off those all-time highs as well. Like, it's not just one sector. It's collectively all of it. You have XLF. Remember, we broke out. We talked about this a long time ago. You broke out here. Things are looking really good. JP Morgan, right? Hit all-time highs, right? Worth considering, right? It's not just one sector. People want to say, oh, it's just the Mag 7. Is it, though? Is it really? Like, Morgan Stanley, bull flagging from all-time highs, like on the weekly. I mean, pretty incredible chart here, to be honest. Actually, really incredible. Apple, you recently made new all-time highs, right? I can continue to go on this list. So, I get it. People are like, well, this is like the dot-com bubble, this or that. Maybe it is. But again, if this is the dot-com bubble, like let's play that game. If this really, really, really is the dot-com bubble, I think we're going to have enough downside that you don't have to catch the top. That's the only thing I'm saying here. So what I encourage is caution. I encourage patience. And I encourage being vigilant and watching the key indicators. The major ones being the 30-year yield. That's your biggest one you got to watch. You start to break back and hold back over 4.2, you probably have an issue. If you get back over 4.4, you have a big issue. That's all you need to watch in the short term, in my opinion, right? As well as watch these earnings. Have a good one, traders. I'll see you on Tuesday.